Okay, today is August 11th, 2023, and this is my trade recap. Coming into the morning, I had proper sleep, proper meditation, and I filled out my DRC real quick. Looking at the daily chart, there wasn't really. It didn't look like a daily chart that was ready for an explosive move to the downside. If there was going to be an explosive move, it was going to be in the afternoon after a bit of fail follow through to the upside or a long enough consolidation for the bigger time frames to look attractive. Or even better, if it doesn't break any key levels and holds and then sets up sometime in Monday or Tuesday, is what I was looking for. So if there was any short side plays, it needs to be a scalp. If there's any long side plays, it also needs to be a scalp until it can reclaim and hold key support, key resistance levels and start to hold and reclaim those levels as new support. So I had one trade today, and it was a bear flag short on the 1 minute, and it was a continuation short play that I missed. I bought 4 evaluation accounts yesterday because it was a 90% sale and it was expiring last night. So I just bought 4, and today I was trying to link it with my main account, my PA account. Oh, actually, this evaluation account was 50K, whereas I've been buying and the PA accounts I have are 100K. So I noticed that the trailing threshold was only $2,500 with profit target only being $3,000. So all you need is a 1-to-1. So it made no sense for me to buy a 100K one. I don't know why I have been. Yeah, it's just a huge handicap. So 50K I think is so much easier and cheaper too. So it was only $16 per account. Spent about $60 and linked it with my main account. I actually took a few discretionary trades last night, and I'm up pretty big on it, but I think I gave it a little bit too much size for the type of setup that it was, and I wasn't too happy with it. So with my executions, at least, as I was taking those bigger size, I noticed myself trading and picking up bad habits again, where I was holding onto my stop, averaging down. It just wasn't good. Even if it's an evaluation account, a $16 evaluation account, it doesn't matter. You need to be focused on the process here, and the process right now is rebuilding those good habits. And if these evaluation accounts make you trade like a degenerate again, then that's a chance for those bad habits to creep back into your trading. So coming into today, I decided to just link it with my PA account and trade it with 4 times the size. So the first trade I took I was watching to take was at this 4471.25 break for that continuation short right here on the break of this candle. But I was linking my accounts together and I actually missed the trigger. So I was already a little bit tilted off that, but not too much. I was willing to give it a chance to bounce and give me a retest and show that buyers weren't really stepping in too much here. So I gave it another chance once I retested my entry level. This would have been a great place to lock in profits on the first predictable wash, and then you could just trail with a risk-free trade. But now I'm buying once that predictable wash has already happened. So this is a little bit more risky play on the bounce, but I still took it here with tight risk, with a wide risk off this 4473. So only 2 contracts here just to start a position. And then this is where I got very confident with this trade, is when I tried to break above the flag line at the break of 4471.75, but failed to continue higher at all. So now I could use the high of this candle as the risk, and I added full size on the break of this 4470.5. So now I have 5 contracts total, risking about $45, $40, and then locked in on not on the first predictable wash because that was only a 1-to-1. On the second predictable wash, I believe into 4468s and 4467s into these 2 candles here. So it was into the bounce, short on the flag line retest. Once it failed to continue higher, add on the confirmation, cover into the 1-to-2 flush. So this is the trade on TradeZilla. Only a 7-minute trade. Risk was actually only $42 on the trade. It was a bounce short. Executions were great. Good scaling, good sizing. So if you just look at the executions, it's actually a very good trade. But after I closed out my trade, I noticed signs of potential greed and just me being unhappy with my executions for some reason. And if you're really thinking about it, there's nothing to be unhappy about. You traded it perfectly. I just wasn't happy about this $84 figure, and I just wasn't happy about the fact that I could have trailed this longer. But that's not part of your process right now, and I'm noticing these signs as they first start to creep back in. And while I was in the trading with 5 different accounts at once, I noticed signs of just my emotions start to be elevated. And that's something to keep note of as well. And these are just evaluation accounts, and you're feeling these signs. So you're clearly not ready for this type of size mentally yet. So good job sticking to this proper size and walking away when you notice those bigger signs of emotions creeping back in. Just eventually, once you keep locking in these singles, keep building these good habits, probably 2 more weeks, 3 more weeks of this, you'll be good to go to size up. I believe that will be the case. If not, worst case scenario, you'll just size back down and just keep bagging in the singles again. So great job recognizing your emotions and walking away for the day. Great job on your meditation. Great job on your sleep. And great job on your sizing. Great job on your scaling. Nothing really to improve today. But I would love to reread the last few chapters of Breaking the Habit of Being Yourself by Dr. Joe Dispenza over the weekend and really focus in on my meditation and sleep over the weekend. Treat it like a regular trading day. Get the proper sleep that you need and the meditation that you need, morning and night. All right, that's it. Thanks.